Then went to 100. So I think this halving goes to 100,000 will be the fair value. So fair value will accrete from 555K today to, by the halving next April, May, call it June. So let's call it middle of summer next year. $100,000 will be fair value, but we won't go to 100,000. We will get to 100,000 and then we'll have speculation. Now, how much speculation? Depends on the approval and the timing of the approval and where we are in the adoption cycle and how much of that 300 billion is coming in. It depends on the amount of leverage that allows people to increase their buying power. And I think the leverage will be lower this time. And so let's say we blow through that 100K and we're at 150K. That seems reasonable to me. So somewhere between 100 and 150K.
Mark Yusko believes that Bitcoin is going to between $100 and $150,000 by the time of the Bitcoin halving next year, which is just 8 months away. Yusko is the founder and chief investment officer of Morgan Creek Capital Management, which has over $1 billion currently under management. In his latest interview with Kitco News, he gave his latest Bitcoin price prediction and broke down why both the Bitcoin halving combined with the spot Bitcoin ETF approval will send Bitcoin to 6 figures and beyond. Make sure to stick around to the end of the video where Yusko breaks down why Bitcoin's 4-year halving cycle is genius and why consequently the 4-year boom and bust cycle of Bitcoin is programmed. Also guys, I have just launched a daily 5-minute crypto newsletter. I was so sick of seeing people charge hundreds to thousands of dollars per month for on-chain crypto data and breakdowns. So to give out as much value to you as possible, I am sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know all in a nutshell. And my promise to you is it will be completely free forever. Click the first link in my description, enter your email to join over 5,000 others in becoming a better crypto investor right now. If you don't like it, I will personally send you $1 whole so you literally have nothing to lose. Now here's Mark Yusko with why he thinks Bitcoin is going to $100,000 and beyond.
I'm okay with numbers because I have a logic for it. Doesn't mean I'm right, but I have a logic for where I think the price is going to go and why I think it's going to go there. And I certainly think the spot ETF is going to impact this. But the primary reason for the movement in the price is the halving cycle. So the halving cycle is really one of the most genius ideas that I've seen maybe in my whole career. And that's a big statement, but it really is. And what do I mean by that? I mean, markets are not prone to movement, right? They only move if there's excess demand or excess supply. Now, there's never excess buyers or excess sellers because for every buyer, there's a seller. For every seller, there's a buyer. But there can be more people with a proclivity to buy or proclivity to sell. And that does have a directional impact on markets. Like if boomers are, like myself, are in an accumulation mode for the last 20 years, there's going to be an upward price momentum for stock. Because every 2 weeks, we're throwing money into our 401k and 403b and mindlessly, blindly, and that has to buy the same 7 stocks, which is why they keep going up. As those boomers start to turn 71 and a half, which is now going to start to accelerate, there'll be net outflows. So you're going to have to find someone to replace those outflows with inflows, and that's going to be a tough call. So maybe there'll be downward pressure in the future. So my point on Bitcoin is the halving, it guarantees movement. And why is movement important? Well, and what do I mean by that? Meaning, I'm a miner. If I were a miner, I bought a bunch of machines, I put them in the room, I plugged them in, and I rent that computing power to the network, to the Bitcoin network, and I get paid block rewards. Block rewards are the payment that I receive for providing compute. And my costs are fixed, my electricity's fixed, my machines are fixed. If suddenly, which is in code every 4 years, my rewards get cut in half, I'm out of business, unless price rise. So what has happened in every halving so far, the price adjusts to make the miners whole. That makes sense. If the price doubles, right? Because the price, the block rewards fall in half, so the price has to double. Well, if your price doubles, what does that do? Well, that attracts speculation. And if speculators come in and then leverage comes in, price will go from a linear increase to a parabolic increase. And we've seen that every single time. So I can look at what the fair value is of Bitcoin using a Metcalfe's law model. And Tim Peterson has the best one, and I just use his. And it would have told me that in 2017, the fair value was $10,000. So when it hit $20,000, it was destined to go down. And it did, all the way to $3,000 because people got overly pessimistic. And then it rallied, and I could see that the fair value in 2020 was $30,000, but we went to $69,000. So it was going to go down. So I believe fair value today is $55K using that Metcalfe's Law model. I believe that every halving 10x's the total value of the network. And that's just because the number of people and the way Metcalfe's Law works, and there's an exponential growth factor. And so we start with 1,000, then we went to 10,000. Then we went to 100. So I think this halving goes to 100,000 will be the fair value. So fair value will accrete from 555K today to by the halving next April, May, call it June. So let's call it middle of summer next year. $100,000 will be fair value, but we won't go to 100,000. We will get to 100,000 and then we'll have speculation. Now, how much speculation? Depends on the approval and the timing of the approval and where we are in the adoption cycle and how much of that 300 billion is coming in. It depends on the amount of leverage that allows people to increase their buying power. And I think the leverage will be lower this time. And so let's say we blow through that 100K and we're at 150K. That seems reasonable to me. So somewhere between 100 and 150K.
By middle of 2024, after the halving in April.
That seems like a rational response to the halving and to the potential increase in demand from a futures or from a spot ETF. And people are like, no, that's silly. Well, no, look, there's a limited supply, and the supply isn't just limited by Satoshi himself, right? The 21 million, which isn't 21 million because it's less because there's lost and stolen, but it's not that limited supply. It's the fact that there's so many people who will never part with their Bitcoin, either because they can't, the Satoshi wallet can't move because it appears it was a multi-sig and at least one of the people has passed away, or people just don't want to sell. You know, Dan Held, I love his last name, right? He's not going to part with his Bitcoin, no matter what the price is. So he's just not going to sell. So the free float of the network is really small. And so everybody says, well, you know, it's $30 trillion market that is advisors that use ETFs. All right, let's say they do 1/10 of 1%, $30 billion. That's not that much. That's not going to move the price of a, $500 billion asset. It's not a $500 billion asset, a free float. Free floats, maybe 100 billion, maybe. So 30 billion on 100 billion, price is going to go up. But it might not be 1/10 of 1%. What if everybody did 1%? Which isn't even outlandish, given it's the best performing asset last 3 years, last 5 years, last 10 years, since inception, 14 years. So if I'm an investor or I'm a fiduciary of investors as an RIA, I might have to put some percentage in Bitcoin if everyone else is doing it. So at that point, what if it's 1%? Now we're talking 300 billion on 100 billion of free float. That's a big move, like huge. Speculate. Michelle, we've seen this movie before, and history doesn't repeat, but it rhymes. And it wasn't an ETF, but it was GBTC, the trust. So in the last period, 2017-18, GBTC kind of came into existence, and we saw the price go from 10,000 to 60,000 when fair value was more like 20,000, and that was a crazy move. But it was again supply and demand. Then it fell, and then it, rebounded back up all the way back to 69 before the bear market, which coincided, by the way, with the approval of the futures-based ETF, which I will argue was absolutely intentional to depress the price ahead of the forecast approval of the spot ETF. Look, here's the thing. Remember the gold ETF? The gold ETF sat waiting for approval for 3 years. Now, why did it take 3 years to approve? It's a great product. Lots of people use it around the world. Why did it take so long to get approved? Well, some would say because JP Morgan didn't want it to be approved. And if JP Morgan doesn't want it to be approved, it's not going to be approved. And so why didn't JP Morgan want it to be approved? Well, and this is not speculation, I'm not making an accusation of anything that hasn't been, documented, and, they pled guilty. Actually, they didn't say guilt. They paid a fine without admitting guilt last year for almost $1 billion for spoofing the gold market.
Yeah.
That's fact. That's not fiction. That's not, slander. That's just fact. So they are short a whole lot of gold. And once they got short the amount of gold they wanted to be short, they're like, hey, we need someone on the other side. So fine, you can have a gold ETF because they'll be the long to our short. Good. Works. I think same thing happened here. There was all this rhetoric about the market's too volatile and too unregulated and too easy to be manipulated. Are you kidding me? How about these triple leveraged VIX ETFs that have lost 99.99999% because they're just silly. They're stupid. They're totally manipulated. They're totally bad for clients. And the SEC let those get up day and night because they're very profitable for the companies that issue them. That said, there was all this rhetoric that we can't have a Bitcoin spot ETF. Oh, but we can have futures ETF. Well, what does a futures ETF allow you to do? It allows you to create paper assets. And anytime there's an imbalance of paper assets to physical assets, think oil, think natural gas, think wheat, think anything, you can get these big spikes and big crashes. And that's exactly what happened. So people were able, $1 billion flowed into the futures ETF. Well, for every long, there has to be a short. Well, who would be writing those naked short? Maybe the same institutions that now are going to get approved to go long at a lower price. Magic.
So there it is, straight from the seasoned investor Mark Yusko, a deep dive into the potential future of Bitcoin and the genius behind its 4-year halving cycles. Understanding these intricate nuances and predictions can be a game changer for your investment strategies. Yusko's insights shed light on the foundations of Bitcoin's code and its boom-bust cycle, emphasizing why so many see it as not just a cryptocurrency, but a revolution in the financial world. I hope this discussion brought clarity to your crypto journey and gave you a clearer vision of what the coming months might hold for Bitcoin. If you want to stay at the forefront of the crypto scene, do not miss out on my daily 5-minute crypto newsletter. It's the quickest way to keep up with expert analysis, latest trends, and pivotal news. To sign up, just click the first link in the description. Anyway guys, hope today's video provided you with some value. I'll see you all on the next one, and as always, all the best.